Hello, today we are going to be finding stocks or companies which are monopolies or near monopolies in India. So, all of these companies are going to be Indian companies. And what exactly is a monopoly or near monopoly for this video? Now, the criteria for being a monopoly or a near monopoly is number one, you have to be a clear leader in the market you are competing in. And number two, this is preferable, have a significant market share. So first, of course, you have to be number one in what you do, and then second, having a very big market share. So let's say you control like 10 to 15% of a market, but you are the biggest because your other competitors are even smaller. I guess we won't count it. But if you are like the clear leader, you're number one, but your market share is like 40% plus, 50%, 60% plus. Though I understand that does not qualify as monopoly under the traditional criteria, but it's for the video, okay? So the first contender that we have is IEX, Indian Energy Exchange. Wow, it has a 90% plus market share in the market it operates in. And from what I have read and what ChatGPT tells me, the market that we are referring here to is power exchange market. Like stock exchange where we buy and sell stock, the power exchange market is when electricity or power is bought or sold. So who is IEX, Indian Energy Exchange? It's India's largest electricity trading platform where buyers like discoms, industrial consumers, and sellers like power generators and renewable energy producers, they trade electricity in real time. So, okay, moving on. India's power market mostly runs on long-term power purchase agreement. So, electricity in India is usually bought and sold under long-term agreements known as power purchase agreements, but portion of India's energy or electricity produced is traded under short-term contracts or even short-term trading. IEX operates the day-ahead market, the real-time market, the term ahead, the green power, and REC, also known as Renewable Energy Certificates market. So it acts like a stock exchange. So IEX acts like a stock exchange, but instead of shares, you're buying electricity and you're selling. Buying and selling of electricity happens in megawatts hours. So these terms, day ahead market, DAM, real-time market, RTM, all these terms are frequently used in in IEX's investor presentations. So if you're ever reading them, and if you don't know what DAM, RTM, REC, all this means, so you can see from here. Now you know. So moving forward, seeing the financial performance of IEX and where it's making its money from. Here we have the consolidated financials. In fiscal year 2025, it had a revenue of 657 crore rupees, EBITDA of 588 crore rupees. So very high EBITDA, very high EBITDA margin, and profit after tax, big profit after tax of 429 crore rupees. Here you can see transaction fees makes up 77% of the revenue, 20% comes from other sources, and 3% comes from admission and annual fees. Other income sources can be money coming from its own operations, but it doesn't state so. So, other income can mean interest income from any deposits they may have with banks or any other investments they have. So, any profit they made through the, let's say, the gain in the value of those investments. Moving forward, these are the overall sales these are sales, these are the operating profits, and the net profits of IEX from 2014 2025. The main thing to see here is the operating margin. You can see here it's 78% in 2014 and it's reaching the highs of 84%, 85%. So extremely high operating margin, very profitable company, Indian Energy Exchange. Its compounded sales growth for the last 10 years has been 12% approx. Profit growth has been 18%. Extremely high return on equity of 40%, 41, 42%, very nice. The market cap currently is 12,919 crores. The stock PE is 29.8 approx. The current price is 145 rupees. And the book value, I believe that's 12.3 rupees. We see the return on capital employed, very impressive 53%. So, a company with a big market share, it's very dominant in what it does. Its return on equity and return on capital employed are both very high. But recently, the stock price actually crashed a little because of a new rule by the government, or ruling by the government under market coupling, something related to the energy market, and maybe it's not that good for Indian Energy Exchange. So you can check that out. The next candidate that we have for near monopoly is Interglobe Aviation Limited, Indigo. Yes, its domestic market share is very impressive. 64% market share in the Indian aviation industry. See, I believe these are by passenger numbers. So around 64% of passengers, I guess, must travel in India when talking about aviation travel, must go by Indigo, which is very impressive. Here we can see last 10 years, the compounded sales growth was 19%, compounded profit growth of 20%. The market cap is a massive 2,24,095 crores, a PE of 30, return capital employed currently as of this year 19.6%, return on equity 129%. So here we can see by the massive return on equity, very asset light model, not a lot of assets here. So the total asset minus liabilities section, the net asset section, the equity section must be way smaller compared to the profits it's making. But the current price of one share is around 5,803 rupees. Here we can see some of its financials. Now these are in millions. Uh, I think, okay, so it's written here 840 million rupees. That's 84,000 crores. 84,000 crores revenue we saw in 2025 compared to 2024, 71,000 crores in revenue. Here we can see the EBITDA and the EBITDA margin in the gray there in the bottom left corner, sorry. So EBITDA of 21,000 crores this year and EBITDA margin 26%, very nice. Profit after tax of, I think that's 7,258, sorry, 7,258 crores for a PAT margin of 9%. So Indigo is one of the very few profitable airlines in India, by the way. Here we have the long-term financials here. The operating margin has seen a nice improvement. It's currently in the 20s. Profit after tax, there has been some ups and downs, but right now it's doing very well. Moving on, we have one more thing. The market share of uh, domestic airlines in India. Here we have December 2023 data, latest I could find. A massive 62.6% coming from Indigo. The second largest, 10.5%, I believe that's Air India. Then Vistara, 9.7%. Oh, Vistara is pretty big. Then Akasa Air with an impressive 4.2% already, but they can see the behemoth that is Indigo Airlines. The next candidate is this is new. I didn't know about this. Computer Age Management Systems. Our mission, your growth is their slogan. The market share is 68%. Now, first, when hearing about computer age management system, it's like computers, is this a software company? But I guess not exactly. It's not a software company. So what exactly is it? It's related to the mutual funds. It's related to the mutual funds industry in India. You can describe it as a back office for mutual funds. What does that mean? Let's say you put money in a mutual fund. So CAMS, computer age management systems, handles the recording of your units, updating transactions like buying, selling, or doing an SIP, sending account statements, processing your dividends, redemptions. So all the work which goes behind whenever you buy or you sell mutual funds, all of this is done by CAMS. So mutual fund houses outsource all this work to CAMS rather than do it themselves, and they earn fees from mutual funds based on the assets managed and the number of transactions. So it's a mutual fund registry and record keeper for most of the industry. We already saw it before. 68% market share by AUM. AUM assets or assets under management. So I guess 68% of the mutual funds assets, they're recorded or not managed, but they're audited, recorded, and all the back office work that's done. 68% of total is done by CAMS. So let's look at its financials. Here we have its compounded sales growth, very impressive. Last 10 years, 14%. Last 3 years, 16%. Compounded profit growth, massive 20% for the last 10 years. Last 3 years, a lower 15%, but very nice still. Extremely high return on equity, 40%. It's currently on the higher side, 44% last year. Market cap, 19,951 crores. Price of one share is around 4,000 rupees, 4,034. Return on capital employed, 54.8%. ROE, we already saw, very high, 43.9%. The stock PE is currently around 47.3 prox. And here we can see some of its financials, overall financials over a very long period of time. Here we see the sales in March 2014, 320 crores. OPM was only 19, but we can see here the operating margin has been consistently rising. So in March 2015, it was 34%. In March 2019, 30%. And currently in 2025, it's 46%. You can see a very nice increase in operating margin also. We already saw its profits have been increasing very well. In 2025, it produced a profit of 441 crores. Total revenue of 1,334 crore rupees. Very, very nice. And one more last thing we can see here is the AAUM. Now I have no idea what is exactly is AAUM, but again 68% market share, very nice. I guess we can move in a bit. So AAUM serviced by CAMS, 45.6 trillion rupees. I believe this should be around 45.6 trillion rupees, should be around 45,000. 45,000, I think 45,000, 4.56 lakh, wait, 45,000 crores or 4.56 lakh crores, I don't know. But 45.6 trillion rupees, the AAUM serviced by CAMS, and the entire industry AAUM was 67.4 trillion. So industry AAUM is 67.4 trillion, and 45.6 is done only by one and one, that is CAMS. So it's a powerhouse. And you can see here, year-on-year growth of 23.9%, very impressive. Here we can see the equity AAUM, 24.8 trillion of the 37.6 trillion of the total industry thing. And it's growing in line with the industry, it seems too. So yeah, I guess that's it. These were the three companies we looked at. We looked at CAMS. Let me zoom out. Yeah, we looked at CAMS. We looked at Indigo. And who else we look at? We looked at Indian Energy Exchange. So this was part one, and part two will be coming out hopefully soon. Bye.